Welcome to D-Rextional, your weekly market review. Today is Sunday, August 28th. I'm going to take you through some of the charts that I think is relevant for the week ahead, and you can tag along. Let me know if there's anything you want me to add to these weekly reviews, and I will be happy to do that. After I go through the charts, I will tell you a little bit about what's coming up in the week ahead, okay? Starting off with the VIX, as you know, Jerome Powell made some comments and the market reacted poorly to it on Friday. This is the VIX, the volatility index, or fear in the marketplace, which went up 17.26% on Friday. S&P 500 dropped, as well as the Dow Jones Industrial Average and the Russell 2000, which is the index for the small market caps. The Russell 2000 dropped 3.03%, and that's about 1,000 points. The U.S. 10-year minus the U.S. 2-year Treasury bond yield inversion yield curve is on an inversion currently. I'm in the 1 month chart here showing you. Now anything below this line, the zero line, will indicate an inversion. And just to show you how this works, back at the dot-com crash of 2000, we had an inversion. We had another inversion around 2006, which indicated the 2008 recession. This is where we are today. We are inverted, and I'm going to go to the daily chart, and you can see where we were last week. We did see another downward turn there. So we'll see what happens in the future. The dollar currency index continues to move up. The Canadian index has been on a downward climb. It looks like a cup and handle pattern here potentially. We will see what happens once it hits the 200-day moving average. It is just below that. Oil has continued to move down, but it is showing some signs that it may have found a bottom. We don't know. We'll see. Gold continues to move on a downward trajectory, as well as silver. Gasoline continues to move down. It's 7:52 p.m. on Sunday night, and it looks like it's actually gapped down because the markets are open right now in the futures. For Sunday afternoon, they open up. The lumbers market is continuing at its lowest point in the last year. Natural gas is making some new highs, and we are keeping an eye on natural gas. Gasoline continues to move down, which I already mentioned. And I'm keeping an eye on the wheat futures only because of the Ukraine and Russian war, because they do supply about 40%, collectively supply 40% of the world's wheat. So just keeping an eye on that as well. Okay, that's it for this week. The general market seems to be in a bearish trend. I'd advise not to buy any breakouts this week, or if you do, make sure you put a really tight stop on it. You can make money in the bear market. You just have to watch for those mini rallies. Some of the best rallies come out in bear markets. So just keep an eye open and keep your tight stops. If the stock you're investing in isn't reacting the way you want it to, just pull your money out. Okay, you don't have to hold. Good luck. I'll see you guys next week.